Could Europe actually be disrupting America's plans for China? What is driving these surprising moves, and how could they impact global politics? In today's video, we uncover the hidden motivations and intricate dynamics that are shaking up the world stage. What strategies are being deployed, and what's at stake for all the players involved? Trust us, you don't want to miss this. Global power dynamics are rapidly shifting as Europe, an essential US ally, moves away from America while strengthening ties to China. An unprecedented move, considering Washington is working actively to limit China's influence. Macron made one of the most notable moves towards strengthening relations with China by visiting Beijing and meeting President Xi Jinping, where he stated that Europe must avoid being drawn into crises that do not pertain directly to it. Macron made reference to the ongoing tension between US and China over Taiwan. His remarks caused outrage among American conservatives, who accused Macron of betraying American interests by prodding China into taking further actions against their neighboring nation. Macron did not limit himself to criticizing Chinese actions alone in his statements about Taiwan. Rather, he also lashed out against Europe's efforts in Ukraine, saying they cannot effectively resolve its crisis, therefore being powerless to warn China over Taiwan. These comments reveal a growing discontent among European leaders with US foreign policy decisions. Germany, another important US ally, has also recently drawn closer to China. According to reports in the New York Times, German companies have begun pivoting toward China due to US efforts at isolating it. Energy sanctions against Russia had devastating repercussions in Europe's energy supply network and have forced companies like Volkswagen, Mercedes, and BMW to invest more heavily there. Volkswagen sold 1/3 of all vehicle production there, surpassing sales across Western Europe altogether. BASF operates 30 production facilities there currently, as well as recently unveiling plans to invest an impressive 10 billion euros into building out their Chinese headquarters. German businesses and European powers' pivot towards China is not solely an economic decision, but also a political one. They cannot follow America into confrontation with China, which could cause devastation to Europe as a whole. Europe needs to find its voice in global affairs rather than being dictated to by Washington or Beijing alone. However, this shift in power dynamics poses a unique set of challenges to Europe. The energy crisis has already cost more than $1 trillion to date, with no relief expected until 2026 on global gas markets. Europe's recent decision to close down nuclear power plants further deepened their energy crisis. Therefore, finding long-term sustainable solutions such as trading with China may not suffice, as long-term support is required for long-term sustainability of energy supplies is paramount for Europe. Now it's time to take a look at the intriguing world of global politics. Macron's recent comments have exposed a growing rift between Europe and America, sparking debate on foreign policy issues. But what's driving this schism, and how might it reshape international dynamics? French President Emmanuel Macron's comments regarding Europe and America's relationship have caused much discussion, exposing an emergent schism between them over foreign policy issues. On his visit to Beijing this year, Macron made comments suggesting Europe avoid getting drawn into crises that don't arise naturally, rather than blindly following US decisions and blindly follow its lead. These were meant to send a clear signal that Europe remains independent on the global stage rather than being dictated to by US decisions regarding international politics. Macron's remarks did not go over well with American conservatives, in particular among radio host Mark Levine of conservative radio station WFNJ in Chicago, who accused Macron of betraying America while provoking the Chinese to act. Additionally, the New York Times published an article with title, "French Diplomacy Undercuts US Efforts to Curb China," further underscoring tension between Europe and the US. Macron's remarks weren't limited to China. They also addressed Europe's efforts in Ukraine, insinuating that due to Europe being powerless to resolve this crisis, and warned China credibly about Taiwan. His stance reflected growing dissatisfaction among European leaders over US foreign policy decisions regarding Ukraine in particular. Macron's remarks have made an immediate and dramatic effect on Europe and US relationships. Europe has historically been one of America's main allies and shared strong ties in terms of defense and security cooperation. However, Macron's statements have revealed growing disparate positions on foreign policy matters related to China and Ukraine that could threaten those bonds. US policy has focused on curbing China's influence, while Europe has taken a more balanced stance towards her influence. Europe views China as an essential trading partner and acknowledges her growing political and economic significance. They have also pointed out US unilateral approach to foreign policy, which does not consult allies prior to acting unilaterally on such decisions. Macron's statements echo an increasingly widespread sentiment among European leaders that Europe needs to find its own voice and assert itself globally, instead of being dictated to by Washington or Beijing. Recent events, like sanctions against Russia that decimated Europe's energy supplies and forced German companies towards China, have only reinforced this view further. Macron's remarks highlight a changing global order as they underscore Europe's changing relationship with the US, with Europe asserting independence and shifting towards building stronger ties with China, signaling to America that they won't follow into conflicts against China blindly, like in previous conflicts. Such power dynamics present challenges to US foreign policy efforts, as their allies change drastically over time. Germany, Europe's largest economy, has been hit hard by Europe's ongoing energy crisis, triggered by sanctions against Russia, which decimated Europe's energy supplies and forced German firms to turn towards China for natural gas supplies. This crisis has had major ramifications both economically and in terms of Europe's energy security. It threatens both growth and security alike. German automakers Volkswagen, Mercedes, and BMW have been particularly affected by the energy crisis. These companies rely heavily on revenue generated in China to support operations across Europe due to rising energy and labor costs. China serves as both the world's largest consumer market, as well as being an invaluable marketplace for German car companies such as Volkswagen, which operates over 40 factories there and sells roughly 1/3 of all their production, more vehicles sold here than anywhere in Western Europe. Responding to the energy crisis, German companies have turned their sights towards China in search of alternative sources of natural gas, and economic opportunities abound in this market. German firms eagerly anticipate tapping into it. BASF, one of the premier chemical companies worldwide, operates 30 production facilities in China and recently announced plans to invest 10 billion euros, constructing a chemical production complex which will rival that of their German headquarters, underlying how important China is in BASF's growth strategy. Other German firms, including Siemens and Deutsche Bank, have been expanding operations there as well. This shift towards China has been driven by several factors. First, its economy has experienced fast-paced expansion. China now ranks as the world's biggest consumer market. Second, Chinese authorities are opening up to foreign investment more freely, allowing German firms significant opportunities to expand operations within their borders. Thirdly, Germany sees China as an essential partner in combating climate change. Many see them as being key elements in creating a low-carbon economy transition process. German companies' move toward China has had far-reaching implications both within Europe and for the global economy as a whole. Europe has long been considered an ally of the US in defense and security matters. The relationship is strong, yet their decision to turn towards China signals their independence while developing deeper bonds with global powers. Such a shift poses a formidable challenge to US foreign policy efforts, where Europe had long served as one key ally. This pivot towards China has broad ramifications for the global economy, as German companies become more dependent on China for growth, creating vulnerabilities should tensions escalate between US and Chinese relations. But German businesses view China as part of their overall growth strategies, accepting any associated risks while doing business here. Now let's explore MCF Energy, its ambitious plans, and its potential to become Europe's dominant natural gas company. Is it a unique investment opportunity amidst Europe's energy crisis? Europe's ongoing energy crisis presents investors with an invaluable opportunity for capitalizing on growing natural gas demand in Europe. Companies like MCF Energy that specialize in exploring and developing natural gas assets within European borders stand poised to reap these profits. Europe's energy crisis was precipitated by sanctions imposed against Russia, which severely disrupted Europe's energy supplies and forced German companies to switch suppliers to China instead of Russia. As a result of this event, natural gas is seen as being part of its solution and considered an integral resource. MCF Energy stands out among European natural gas asset development companies by actively exploring and developing natural gas assets, well positioned to meet growing regional demand. MCF has identified and purchased 2 promising drilling zones in Austria and Germany and are actively drilling there. One reason MCF Energy appeals so greatly to investors is due to its commitment to solving some of the world's greatest challenges, such as Europe's energy crisis and dependence on Russian natural gas, while also striving to become Europe's dominant natural gas company. No other company currently explores for natural gas in Western Europe, so MCF Energy has an unmatched opportunity in becoming industry leaders. Investors have shown keen interest in MCF Energy due to its team of experienced energy executives and investment bankers, including General Wesley Clark of U.S. General Military History. one of Europe's premier oil executives and investment bankers with his directorship at Bankers Petroleum, which increased production 2,000% and valued over $2 billion. Clark remains one of the most connected Americans living there, who is capable of opening doors and making things happen quickly for shareholders like Ford Nicholson, who have also joined MCF Energy as major shareholders and advisors. MCF Energy's focus on natural gas exploration and production in Europe makes its effort all the more appealing given this region's surging natural gas demand. Europe currently imports expensive natural gas from North America, which must be frozen, loaded onto ships, transported across the sea, unfrozen before finally unfreezing at European shores, before finally being unfrozen for consumption. An unsustainable practice, which the European Union now encourages companies to find natural gas themselves within Europe, where MCF Energy stands as first mover, allowing it to capitalize on this growing need. MCF Energy is well placed to exploit Europe's ever-growing natural gas consumption by seizing opportunities presented by European demand growth. Investment opportunities such as those provided by companies like MCF Energy offer investors looking to take advantage of Europe's energy crisis. Natural gas has emerged as an integral solution, and investing in companies such as MCF Energy allows you to capitalize on this trend while supporting companies which aim to address some of today's pressing global problems, like Europe's energy woes or its dependence on Russian natural gas imports. Investment in companies such as MCF Energy does come with certain risks. Being relatively small, its success depends on natural gas exploration and production efforts in Europe, which involve dry well risks, regulatory hurdles, and geopolitical considerations, which can impede their ability to meet growth targets as well as potentially having negative ramifications on stock price performance. Investors considering investing in MCF Energy should conduct thorough due diligence and carefully assess its risks and rewards before making their investment decision. But for investors seeking to capitalize on Europe's rising natural gas demand and support companies that work on solving some of the world's greatest problems, investing in companies such as MCF Energy represents an attractive opportunity.